Good evening, it's Sunday, June 29th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So there won't be a Metals Minute here in the morning. We're going to be traveling back to the Florida office, so I'll be out of pocket here for a couple hours. But last week, the S&P 500 reached a new all-time high on Friday. It's first since February, rallying about 24% from the lows seen in April due to the tariffs. The gap between the two records spanned about 89 trading days, making it the quickest recovery to a closing high after the sell-off of at least 15%. What we're seeing right now with the S&P 500 pushing on up is rapidly improving macroeconomic backdrop, continued enthusiasm around AI, and also underweighted positioning here in favorable technicals. We're seeing non-profitable tech as well as copper and AI and semiconductors all were among the themes that outperformed last week. We've got earnings for the S&P 500 for the second quarter beginning on July 15th, where 73% of the S&P 500 will report between July 11th and August 1st. Looking at the economic data coming out and also the economic data we saw last week, we had PCE inflation data for May was higher than expected, but it does not reflect the full impact of the tariffs. So we suspect that higher inflation over the next few months, rate cuts are coming, but not likely until we get clarity on the trade. Now, looking at the week ahead, we do have key economic data releases here with the U.S. jobs report for June on Thursday ahead of that Independence Day holiday on Friday when the markets will be closed. We do expect payrolls to come in at 125,000 jobs created. That's going to be down slightly from the 139,000 we saw in May. We also see unemployment rate staying right around that 4.2%, but the hourly earnings growth is expected to slow 0.3% from 0.4%. So ahead of the Thursday release, we are going to see the U.S. labor market come in with the May JOLTS report on Tuesday and the ADP report on Wednesday. The focus will also be on the June ISM data on Tuesday. That's where it's going to cover the manufacturing, followed by Wednesday we'll see that services data. Now shifting to the metals, because the metals did open up under some pressure here. The low was 32.50 on the gold market. As of this recording, it's down about 9, well off of those lows, about $28 at 32.78. We also saw silver futures come under an initial degree of pressure here before rallying back up. You look at the S&P 500 up about 15 at 62.39. I believe that the upside target in the S&P 500 6,300, your key level of support being about 61.50, and the Nasdaq's up 70 at 22,821. So on the gold market, and stick with that theme here, we believe that strong central bank buying as well as increased ETF holdings, Fed interest rate cuts, they are going to boost gold futures back up to the 35 to 3,700 by year end, and then our 12-month price target and outlook is 4,000. That'll be 12 months from now. Now recently we've seen that market fail back and the futures have broken below that 50-day moving average. If you know me, I'm not a moving average person. So the key levels of support here are going to be 32.50 and below that's 3,200. We have seen decreasing Middle East tensions, trade deals with China, and U.S. equity risk on have been the major catalyst here recently for the sell-off. Your resistance point is going to be about 3,400 on up to about 3,410. I have seen some recommendations out there looking at the 1 month 3,200 put for protection due to the decreasing volatility premium. Looking at the silver market, money managers have decreased their bullish bets by about 4,348. Net long positions to 45,686. That's the weekly CFTC data on futures and options showing. The net long position is the least bullish here in the past 3 weeks. We still expect the silver market to be undersupplied this year with a modest recovery in industrial activity into next year here, as well as those lower U.S. interest rates. The weaker dollar should help lift prices up. Our forecast points to a firm holding on up to about that $38 handle over the next coming quarters. If you have any questions on futures and option trading, send an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss and may not be suitable to all investors. Good luck and good trading.